Hello, welcome to Big Brain. In this channel, you can get latest updates in SAP S/4HANA, both on-premise and on-cloud edition provided by qualified professionals. In this series, we are going to cover these topics in controlling module. Now, let's jump into the first topic.
In this video, we can see the updates in actual costing material ledger. Actual costing material ledger fulfills two basic objectives: the ability to carry material prices in multiple currencies, valuation, and actual costing. A fundamental task of the material ledger is carrying inventories in multiple currencies and/or valuations. The material inventory values are normally carried by the system in only one currency, that is company code currency. The material ledger enables the system to carry inventory values in two additional currencies valuations. This is achieved by updating all goods movements in the material ledger in up to the three currencies or valuations. Currency amounts are translated into foreign currency at historical exchange rates directly at the time of posting. So business in high inflation countries can therefore carry their inventories in a more stable currency. This makes the effect of inflation on material inventories transparent. Now, in the actual costing, the functionality of the application components with the purpose of determining actual cost for externally procured material and materials produced in-house. In addition, actual costing uses actual cost to evaluate inventory of raw materials, semi-finished products, and finished products. Actual costing calculates an actual price, which is a periodic unit price for each material into which all actual costs for the particular period flow. Actual costing evaluates all goods movements within a period at the standard price. At the same time, all price changes and also the exchange rate differences are booked to the material ledger. That is why we can able to derive or calculate the actual price of the inventory. At the end of the period, an actual price is calculated for each material based on the actual cost of the period. This actual price is called the periodic unit price and can be used to reevaluate the inventory for the period to be closed, which is to be closed. In addition, we can use this actual price as the standard price for the next period also. So now the WIP, which is a work in progress account, is still evaluated using the standard price for the materials and activities consumed. A revaluation using actual price does not take place at this period, but subsequently when the work in progress is completed and received in the next period, the valuation of actual costing will be made for those materials which has been produced in full. Evaluating the inventories with the periodic unit price provides a method of valuation using actual cost while avoiding the problems associated with using the moving average price also. So preliminary valuation of goods movements using the standard price makes a consistent and reliable cost management of our production process possible while making variances within the production transparent. So we have the advantage in actual costing for both standard evaluating the materials at moving average price as well as the standard price. So reevaluating inventories at the end of the period with the periodic unit price is optional. Therefore, the functions of actual costing cannot only be used to calculate actual cost, but is also useful information purpose in conjunction with the other cost accounting system. And by calculating the actual prices for materials, actual costing can aid us in making decisions such as whether to make or buy decision, because data in actual costing is updated at the level of a procurement alternative. It is possible to compare different sources of supply to make a decision. So these are all the advantage of activating the material ledger and running the actual costing periodically. So we can see in the next video about the other areas in costing. Thank you.
Like, share and subscribe Big Brain to get updates. Leave your comments in comment section. Bye-bye.